Welcome back, guys. So, big news: Federal Reserve just cut interest rates by 50 basis points, and that's maybe that's good for the market. We had an initial pop this morning, but then it started to sell off. It doesn't look like it's holding as much strength as you would think it would, and it's it doesn't. Basically, what's happening is my thesis around the Federal Reserve is completely playing out to a T. Basically, the thesis goes, and if you go back to like my first couple videos that I put out a year, 2 years ago, whenever that was, I point out that the Fed is out of bullets and they just can't raise interest rates. They can't, they have to. The only way they can basically keep this economy propped up is through killing the value of the dollar. And that's what they continue to do. They just continue to do that. They were raising interest rates for a while. The market, crashed back in 2018. Here's the SPY chart. If we show you this, they were raising interest rates, and then the market crashed all the way back here in 2018. And that was the end of the Fed, basically, as that was pretty much the end of their attempt to raise interest rates and to ever go back to normal after the Great Recession. So in the Great Recession, they obviously dropped interest rates to zero and just expanded their balance sheet 400%. No big deal, though. We're in a strong economy, apparently. And then they try to raise interest rates. They raise it 75 basis points. They raise it 3 times. Start to reduce their balance sheet by half a trillion or whatever. And the market completely implodes, and that was it. They were done. And now they've increased their balance sheet back up. They're cutting rates back to zero with another half-point cut today. And every single time we get a market move down, a sharp market move down, the Fed's capitulating and trying to keep things propped up. Ultimately, what this is most likely going to do is the market is going to head lower. They can't stop the market from heading lower, and it's going to head lower, and they're going to be forced to come out with a new quantitative easing program. They'll cut rates to zero. We're almost there anyways, so they'll go to zero, and then they'll probably start pumping a bunch of cash into the market, and maybe that's good for the market. You might have stocks moving up. But the value of those stocks, the nominal value, the real value with inflation will probably be moving down. And what we want to look at now is the gold charts, because that's really the thesis behind this. So let's go ahead and look at those and see what's going on. So first chart I want everyone to pay attention to. If they don't look at it, you need to be looking at these kinds of charts under this dynamic, under the market dynamic that we have with the Federal Reserve. The market is weak. The economy is weak. I'm sorry. The market, is detached. The market is basically reliant on continued stimulus from the Fed. And it's been that way for the entire last 10 years. And without the stimulus, the market heads south. And we just saw it, in action last week. The market headed south. They need stimulus, and they got some, and we'll see what that does. But what's it doing to the dollar? Well, the dollar ran up, and now it's just completely falling off. It's just selling off. So this should continue, this sell-off. We should continue to see the dollar fall off. Probably going to head down to this 94. And gold. Let's look at gold. Here's bullion. Big move up. Just a big spike up. So last week, the big sell-off, I kept saying it. I was like, that's a fake out move. That is, either forced sellers or a bank smash. I don't really know what it is, but to me, it seemed like forced sellers, like margin calls firing off. But it was the fake out move. That move was used for people to take, banks or whatever, to take up positions in gold ahead of this Fed rate cut that we just got. So, again, I'll just keep reiterating it. Gold is in a bull market. The chart, it's in a bull market because of the chart. Here's your chart, bull market chart action. You've got nothing but up, this is just an uptrend. If I just draw it out, okay, you've got an uptrend. We can just keep it really simple here. You've got higher prices coming, and that's about as much as I need. I mean, if you want to look at the level to watch, you can watch some of my other videos, but here's your level. 1565 is the low end, and 1900 is the high end. That's your level for gold bullion. That's your range. We get that from the weekly chart here. Here's your range, and most likely we're going a lot higher than 1900. And that's because the Fed is out of ammo. All they can do is basically sacrifice the dollar, and they continue to prove that that is what they're going to do. So until that changes, that dynamic, the gold should continue higher. So here's Barrick Gold. I explained that right here at support. I explained this in the last couple of videos. When we had that big smash, I said all they did is come back down and tag support. I added to the position right there, and quite a bit actually. And since then, that was really the low last Friday. It's up 16.5%. So, I don't know how else to explain it to you. If you're not kind of trading this, then you're not really understanding how these charts are being read. So if you have questions, leave them in the comments below. I can kind of outline it for you. But basically, we've got support down here, and we ran down and tagged it. We should move higher. Everything on the gold charts is going to just be ripping higher. GDX, here's your GDX. NUGT, I took this for a day trade today, and this is continuing to move higher as well. You can see that it just continues to move higher. AEM, this is one that I was hoping to get it at $40, but I kept saying I don't think I'm going to be able to. I don't think it's going to get down there. But down here around 40 was a nice, just really easy to read trendline support, and I was hoping that's where we go. So I do not own this right now. It's it's just we're below trend. So if I go to the hourly here, we've got this trend line right up here that we're still below it. So I'm just kind of watching this. This might just want to go sideways for a little while. Newmont Mining should be ripping higher. Just kind of a V bottom in gold, because basically the Fed is coming out and just, it all goes back to this dollar chart. I mean, look at, here's the Fed is just destroying the value of the dollar. So, I mean, that's the thing, is the dollar's down 0.3%. And if you look at the stock market, if I roll that out and look at like the SPY, it's, the SPY is actually down too. So you're losing, I mean, as of today, I mean, and this is as of right now, the stock market is losing value, and the dollars, which the stock market is priced in, is also losing value. So you're basically just losing value. If you look at it kind of in real terms, you're losing purchasing power more than what the stock market's losing. So this is what can potentially happen when you get gold really, when you get the dollar really selling off. It can be bad for kind of all assets sometimes, except for things that are priced like commodities. Silver, if I move back, silver obviously exploded higher. I'm still not in silver. They shook me out of this one on this gap down. I sold it right here on this gap down right there. The chart's just too messy for me to like it right now. Maybe it's a big bull flag pattern, but ultimately this chart, we had this flag right here, and it moved up, and then it gapped lower, and it's just up and down. It's a little too choppy for me to actually be able to track accurate levels. So as of right now, I'm not interested in this SLV, because if I don't know an accurate level, and if I can't read the proper reactions on a level, then I don't know when I'm wrong. So if I don't know when I'm wrong, then I'm just gambling. So the point of this video is gold's going to continue to move higher. So gold proxies should do really well. And that's why one of my largest position is Barrick Gold. But I've been talking about the possibility of an inflation slash deflation kind of trade for the last year and a half. And I said, look, the Fed has one of two options. They can either deflate and raise interest rates and allow assets to deflate, allow us to go into a recession, possibly depression, whatever actually would come of that, and then reset interest rates and then allow the weak businesses to fail and allow jobs to be lost around those weak businesses, and then start to rebuild the economy from the ground up. That's one option. The other option, which is the easier option for the Fed to do and the higher probability, is to inflate, which is to continue to print money, continue to cut interest rates, continue to prop up weak businesses and the stock market, housing, all that, and sacrifice the purchasing power or the value of the dollar, essentially stealing money from people who own dollars. And that's what it looks like we're doing. So again, savers, people who save in dollars, continue to lose. But today, people that own stocks are losing too, So the only people that are really gaining are people who are saving in, gold proxies, gold or gold bullion or gold miners. I don't buy gold and gold bullion. I have just a very small amount, but for the most part, I prefer the gold miners. There's a lot more beta built into those. They should do a lot better. So if you believe in gold and gold bullion, and you can take some risk, then the gold miners should outperform. So that's kind of where I'm at. So we're going to continue to watch the market. We'll continue to see what's going on. Looks like the Qs is starting to bounce. So maybe this is, maybe we get some more of a bounce. Again, this bounce here, although Fed induced, does not mean that the selling is over. I am flat right now, the market, and that's just because, I think we're heading up to this 222, possibly fill the gap up to 2, could even fill the gap up to 229, 230, but I don't think we'll get there. I think we'll get about 222 to 224, and then we'll fail, and we'll have the next leg down. So that's how I'm looking to trade it. I want to see confirming price action. Again, that's just a setup. That's not a trade, just a setup. But keep an eye out for that setup to actually trigger. That's it, guys. And thanks. I appreciate the followership, and we'll catch you on the next one. Bye.